Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. Today we are going to have a look at the European energy markets for the week starting 13th of May 2024. Before we jump into it, just one little message. The Clever Markets Technical Analysis Academy starting next week on the 13th of May has been fully booked out a couple of weeks ago, so there's no more seats available. There hasn't been any seats for the past 2.5, 3 weeks. So the next academy is starting in October. So do check out clevermarkets.com if you want to join the next academy. Be fast because the seats are selling out fast if the last few academies were any indication. I know it's still a long time to go, but before you start talking to your colleagues and to your managers and get everything approved, before you know it, it's already September, so be fast. If you don't really know if it is the right thing for you, then do have a conversation with me. You can send me a DM or a message or wherever you're watching this. So the Clever Markets Technical Analysis Academy is specifically built for European energy traders. So do have a look at clevermarkets.com. Okay, cool. TTF. Let's start as always with the the TTF front month, of course, and we're looking at the weekly chart here. I always like to start zoomed out. I think that's very important. So here we see that the long term has been bearish for quite some time until mid to late 2023, of course. And here we can see we are hitting a low that was previously hit in summer 2023, was then hit again at the start of 2024. Now, we did draw in the FIB retracements, right? So we have this down leg here. We kind of want to know how high can this go? And we are putting in the FIBs because we know that anything below the 23.6% FIB, in our case 30.29, is considered noise. I know a band between 22 and 30, that is just noise in quotation mark, you might be asking. Yeah, kinda it is, because we are looking at the long term here, okay? So I know it is still a very wide range, so that is undisputed, but the real up leg will only kick off above 23.6, because then it could go all the way to the 38.2 or 50 or like 61.8% FIB, right? Before we can even talk about the market moving lower. So if, I don't think that is going to happen, for example, we say, we broke above the 23.6% FIB, now the market is pushing higher, and then anything below or at the 61.8% FIB in terms of like a retracement would still be considered a correction in the grand scheme of things. Right, in the grand scheme of things. So then the idea would still for us to push lower overall. So, and we have to take it like one candle at a time, and this is like best identified on the daily chart in this case. But we are using these FIBs here to see how high can the market go without really reversing to a bull trend. And this last resistance area essentially is the 61.8. So anything at or below it in terms of a rise would still reasonably lead to downside continuation. Yeah. So for example, I want to take this. There we go. Boop. And there you go. Let's take from this down leg. How high can we go without it fully undoing the bear trend, right? That would be, there you go, the 23.6% FIB is right here at the 200% EMA. So we would have the downtrend fully reversed above it. Or at least an extensive or upside move, yeah, but never really happened, and we are kind of like below that still. So that's essentially the deal here with the smaller leg now as well. Okay, so how high can we go? Well, that will first be assessed on the daily chart. For now, what the daily chart is giving us is that we could push a little bit lower, and then the market has to make a choice essentially. We push lower again to the 22 level, from which below we would simply continue. I don't see it happening right now. If anything, I'd probably rather see an extended sideways move within 22.32 and 35.22, because we've approached the level already. I know it's a wide range, but that's what the markets are giving us for now. But if we find support somewhere in this area, I can't really tell where, because for that we would have to look at the daily chart essentially, we would still continue higher. So for now, the idea is skirting along a little bit lower, and then we make a decision to either push higher or to push lower. With information available to us, it looks like right now we could still push a little bit higher overall because the bearish momentum simply isn't there anymore. Now we can see the MACD is pulling higher, and we can also see that the 8 and 12 exponential moving average has been pulling higher. That's why the idea is to ultimately push higher. Why do I think that will go down? Because the stochastic has topped out, right? Putting all these different tools into a coherent system makes it way more tradable. So we are not confused by saying, oh my god, stochastic is showing us bearishness, but the MACD is showing us bullishness, and moving averages are showing us neutrality. Nothing makes sense. No, it all makes perfect sense, right? So for now, possibly a little bit lower, as shown by the stochastic. And then we have to catch the market somewhere here, which we will later establish on the daily chart. And the idea is still to push higher eventually, because that's where the momentum and the moving averages are. So this is how we put it together. So that's why knowing just a few indicators is not good enough. That is dangerous half knowledge, essentially. So in that case, it would be better to not know anything. So we have to kind of know a little bit of everything. We have to put everything together into a coherent system. Okay, cool. So now let's have a look at the daily chart. So remember, we are thinking, okay, so maybe a little bit lower on the weekly chart before we push higher. Okay, how low can we go? We did break. Last week was a little bit of a nothing week. So it was very dangerous because nothing happened, right? We had Friday, Thursday, Wednesday, Tuesday, Monday here. And very early on in the week, we established, okay, you know what? We kind of need to break past, let me zoom in, past this range before we can make a decision, higher or lower. We zoomed out and we saw that, okay, so overall, we are still in a bull market. So even a break lower would trigger a down leg towards like 28. And then the market needs to make a decision. If we bounce, we simply continue within the channel. And if we push lower, then the near-term bears would, well, they would not be that happy. The near-term bears would be in charge then. So now last Friday we broke below that level here, yeah. So this range. So we thought, okay, you know what is the next important level of support? Well, it's this trough here. It's not too far away from the supporting trend channel. We could have put it here as well. I mean, this is a bit more dynamic depending on at what angle we hit it, right? So, but for now, I put it here at this trough because it's not too far away. So for now, the idea is, okay, we'll probably push lower. How do we know that? Because this is called a bearish harami candle. So big green and a smaller red contained within it after an up leg. So we pushed below it with this candle here. So now it's kind of activated. We see that the 8 and 12 exponential moving average are topping out. No bearish signal yet, but they are topping out. Volume is reasonably high on the break. Okay, and we see that the stochastic is topping out as well. And on top of that, we see that the MACD is not really moving higher anymore. So the bullish momentum is gone or has been gone for quite some time. So with all this, we kind of established that we have topped out and the first level of support is here. So now the question is, what happens next? Because we see that we have our first lower peak. That's not good for the bulls. But we are still within the channel. So when do we turn bearish? Well, I would say we turn bearish if we get 2 consecutive closes below the trend channel, or if, which possibly should be also below this trough here. What is that? 2785. However, what I want to avoid, and that has happened like a few times, I want to avoid a situation where we just break lower once, but it's like a bullish reversal candle pattern. Then, of course, I would reserve the right to say, you know what, maybe not bearish right now. An example of this here potentially happening is, I'm just making this up. This is not real, yeah. But let's say for whatever reason we would have said, okay, this here is a good trend line. I want you to only look at this, okay? So we see, we broke lower. Of course, it's wrong. Just hear me out. So we broke below the trend channel on a red candle. Okay, so that's bearish. So we kind of want to see a second move. A second close below it in order to confirm the bearishness. But what do we get? We open lower, but we get a bullish engulfing candle here. So not really a bearish trigger at all, and we continue higher. Okay, so I just made this up. The line, of course, was wrong. So that's the kind of stuff that we look at. Now, if you want to time the market even better, we start looking at the intraday chart. And here last Friday, we were absolutely like bang on. So we saw, let me zoom out, that we had this trend line going on here. It's a nice one. 1, 2, 3, 3.5 times hit. So people are looking at it. And we did have this channel here. So what we are doing now is, so last, I think Thursday or Friday, Friday, I said that this channel would likely break lower, and then we'll test the trend line, and there's a chance that we push lower until, I think I actually said somewhere in the towards 30, in the high 29th. And that exactly happens. And now we do happened, and now we do have a flow of lower lows and lower highs. The question is, how low can it go? Of course, here we are using a fib extension. So we are measuring this distance here, and we apply it here. So this would be 100%, so like a one-time move. If we move past that, we go to a 161.8% fib extension. So I think the market could go even until here, which also 28.5, let's say, yeah, coincides with a trough from back here, from the 2nd of May. And also 28.5 is somewhere here, which possibly would be exactly the channel support. So, and this is called multi-time frame analysis. So we analyze top down, but we trade bottom up. So here we now see, we want to see a continuation of lower lows and lower highs, possibly towards 29.3 and then 28.5, let's say, which would be on the daily chart a push towards this level. Then the question becomes, do we bounce or do we push lower? Well, that will be first seen on the intraday chart. Do we continue making lower lows and lower highs? Then yeah, probably looking good. If we start seeing some signs of like bullishness here, then probably it's more likely for us to bounce. So this is why we have to look at the 2 time frames. If you say that the 15-minute is too much noise, look at the hourly chart. That's also good, okay? And then we put all of this in the bigger context, because even if we break lower, it's kind of meaningless because we are still in a midterm sideways trend. If we bounce, however, we do get another chance of testing the 23.6% fib level and eventually pushing higher. So this is how you, with a firm strategy of knowing what is stochastic, how and when to use it, how you combine it with a momentum and a trend tool, looking at the graphicals. So graphicals simply means the market structure, so support and resistance levels essentially. Yeah. So putting all this together on different time frames, that is what makes a good, solid technical analysis. And then also, that's the kind of stuff that helps with trading. By the way, if you want to know more about that, Clever Markets does offer daily analytics. We are the only technical analysis firm essentially that offers a remote technical analysis desk for energy traders, and we do exactly that in regular calls and daily analytics and ad hoc analyst access. So go to clevermarkets.com and check it out. All right, that is all for the TTF front month.